Welcome in, welcome in. We have a interesting show. Josh, Roblesh. We have engineer versus engineer today. I guess that's the story behind the show today. So they're going to go back and forth and get all crazy technical, put some people to sleep, but probably have some interest from other people. Be like, oh, this is awesome. I'll probably be dozing off in the background, but sounds good. We're going to show you some stuff today. Roblesh is going to go back through kind of what he's doing. Yes, Jordan, you are first, and then relaxing Zen is second. Nope, Trader 07, you are not second. Sorry, buddy. Yes, in fact, you are third. So cool, good stuff. All right, Roblesh. Everybody comment about his haircut. So his wife made him get the haircut that he has today. It's a low taper fade. I'm enjoying it. I think it looks sharp. It looks sharp. Look at that. Cool. So welcome in, everybody. Let's kick this off. We'll have Josh and Roblesh go, engineer versus engineer. I don't even know what that means, but it sounds cool. So let's do it.
Yeah, we were having some conversations in the green room here prior to the show starting. If you can imagine, Roblesh probably didn't think his haircut was going to be brought up. But there we go.
Yeah, no,
it has to be brought up.
Sure.
So yeah, engineer versus engineer is a rough term there. What we're going to do is we're just I'm technical, he's technical, so this might get extra technical. But what we're going to do is just dig into what Roblesh does, how he sees the market, look over his charts, explain it. We can all ask questions, but he's got a very interesting way at looking at the market that gives him his edge. And if you guys can get something out of that, maybe there's something you can pick out of it that makes sense for you guys. Let's do that.
Yeah, absolutely. Thanks for having me on. Pleasure to be in the same room, Josh, Brian. Yeah, so pretty much, I mean, everyone's looking for developing a bias, trying to understand where proper targets can be based off of that bias. And oftentimes we have different ways of approaching that. I mean, from VWAP to ICT to auction market theory to order flow, and the list goes on and on. But what I discovered about 2 years ago was a quantitative system that at the time was available for free, and even though it was using up hundreds of thousands of dollars worth of processing power, but now it's paid. And so essentially this helps you to quantify through a probabilistic lens different areas, different levels, and it's a very complex system, but I have a lot of experience with it, and therefore chart out a lot of information from the system that's applicable. And really just two things: it's either contextual or it's actionable, meaning it helps you to understand the bigger picture, and it also helps you to know where to get in or where to get out. So I've been on here quite a bit. It's a great time to be on with TFD. But so you've heard me talk a lot about it, but essentially consider the fact that you're looking for a bias and you're looking where to get in and where to get out. And obviously, because of what happens overnight or regular or RTH, that bias needs to get adjusted from time to time, because sometimes your bias gets fulfilled overnight or gets extended into the RTH. And so these different scenarios you can actually visualize through this tool that we call the fractal in our communities. And so I have taken a lot of time to break down different elements of the fractal and how to use it. I was actually just talking with people in the Discord earlier today, and it's insane. I make this available to I'll show the chart in a moment, but I make this available to our community, and it's amazing what people do and how they add the confluence to what their pre-existing strategy is, and then quantify with the levels that I have provided, and they understand, because I write a lot of articles about this. And then they use it, and yesterday some guy made $15,000 on a funded account, and is managing his risk well. Of course, that's ultimately what the secret sauce is, no matter what strategy, is risk management. So this just helps to quantify areas of interest that people might already have according to what different strategy they are, but it's a very powerful system. But again, risk management is everything. This is So just want to put that at the forefront.
So I love that you're going after hard data. You're interpreting that data. You're looking for statistics to find your edge, to base larger trades on larger strategies. So it's sort of a baseline of quantitative data to say, okay, on top of this, now come up, here's some ideas for risk management. Here's some ideas for how to use it. But what you're really providing is just the statistics and some, when you say fractal, I'm assuming happens on multi-time frames at the same time.
Yeah.
Maybe you could get into sort of like, what was the theory of wanting to do it this way? Because, you know, finding the data, there's a lot of data to work with. And usually when you're working with the scientific method or anything, you need a hypothesis. You need a sense of like,
Absolutely.
I think I'm seeing something here. So let me go find if there's some correlation and heuristics that will here. So
yeah, great question. So I'm actually very, very pleased to say that I did not invent this.
Okay.
So there's a gentleman by the name of Russell, and he about 40 years ago started developing the system using different programming languages, but you can imagine 40 years ago. And he actually built multiple systems for different hedge funds. And along the way, he built his own system based off of what he would learn building systems for other hedge funds. So they paid him a ton of money. And then he has his own system, and that's the system that I use. In fact, there are people sitting at hedge fund desks today that are using the same system that I am. And obviously the communities that I lead and then I'm also a part of. So you could look it up. I could send all that information. His name's Russell, Russell Pate. But because
not Russell as in the RTY, right?
Yeah, not Russell.
Named after him.
No. Okay. Yeah, no, that's ironic though. But what's really funny is that people who literally are like doing these kinds of things, they have actually many times a low profile. And he's that type of person. He's very low profile, but I was actually just talking to him earlier this morning in one of our chats, and he's so down to earth. He just really wants to help people win, and I've definitely just
come alongside. Nakamoto though. He's not that low key, right?
No, he's not that low key. Okay. But I've come alongside his community and built our own fractal community to help people understand how it works.
Right. So you took his concept, he's put it through the ringer for how the math works and how he sees the market. He did it in a bunch of different programming languages, but you being someone that's probably fresher to the programming side of things and has like a more modern approach, maybe you took the tooling that we have and reapplied it. It sounds like in a way that might be unique.
Yeah, so he built this entire system. You have to like RDP into it, meaning you have to connect to it from another computer for everyone that doesn't know what RDP is. And you pull it up and there's a ton of tools inside of it to help you to analyze the markets. And this could be crypto, futures, stocks.
And this is your tool set, you're saying?
Yeah, so I have my own personal subscription and access to the system. So it spins up an instance, and that's my instance. So
your instance off he sells it to you, or is this your thing?
Yeah, no, it's his system.
So he built the system. He spins up an instance as a VM.
Yeah, and that's what I log into.
You connect to it. Interesting. That's a way to do it.
Yeah, and then a bunch of there's hundreds of people who have access to it, and they have their own instance, and there's people. It's very, very powerful. I mean, he's been around for a while amongst hedge funds, and so he has people. There are analysts and traders that are sitting at hedge funds that literally are accessing the same release of instance that I am, and there's a lot of tools inside of it, and so that's essentially what this system is. We call it the fractal or trading system. Over years, it's been deviate as something else, but right now we call it the fractal.
Interesting. Okay.
Yeah,
and I see someone saying fake guru, blah blah blah. It's they're not trying to give you a signal service. That's not what this is. This is just a way to look at the market through a certain lens that can work for certain people. If you if it makes sense for you. So just keep that in mind, guys. If most signal services are sketchy at best, this is not what this is. This is just more information, more tooling.
Yeah, and I'm not delegating. I'm not repeating or puppeting anything he's saying. So there are people that have been on this stream that actually are part of the community, are learning a lot, because it's literally not about some signal service or some trying to be a guru or anything. I think if anyone's read my articles and watched me on the live streams, they know that that's not definitely any of the approach that I've taken. So
yeah, and I think people should be suspicious of anything, right?
yeah.
Because look, there's so many people out there trying to sell you stuff, and it's like
Yeah.
we like to bring people on that are data driven.
Yeah.
Because when you're data driven, you can look at the data and figure out, okay, well, if I back test this, what's the win rate, etc. Right?
Mhm.
And most times these guys aren't showing you, the losses and the wins. They're not actually being upfront with you. And the core behind this whole conversation is like, if this is a tool that you might be interested in, he's going to demo it today. He's going to show you what he's actually looking at, his thought process behind it. Even if you don't use the tool, maybe you're going to learn something from this program. And that's the point, is like, we want to teach for free. We want to provide whatever value we can, but it's not an endorsement to go, hey, go sign up for this thing that he's doing. It's more of like, hey, check it out. This is something cool that maybe you've never seen before. So that's what we like to do, is just share info and bring knowledge to people.
Yeah, absolutely. So I could showcase it today. I have no problem. So people could kind of see and understand that really the amount, again, as Brian was saying, the amount of tooling that there is out there. I mean, this is my chart. I chart NQ and ES, and obviously there's a lot of information on here that is not going to make sense to a lot of people. And for that reason, I'm actually going to jump over to, so my screen is not sharing. Let me share my other screen, if you don't mind.
Sure.
Cool. So let me zoom out. Let's do ES. Cool. Thank you. Let's do ES. So normally when you look at a chart, you see this. If you pulled up ES, you would see this. This is the last 200 days. You would generally see this. Right now it's just like a little plot, but everything would be a candle. Now, what this system does is that it converts what's called a linear graph, which is what you normally see on TradingView or whatever. It converts it to what's called a fractal graph. So basically, it's measuring the cycles, either short or long, across a very important level that's called a pivot. So basically where that particular long or short cycle started. So it will oscillate around this black line, a pivot. And what that it helps us to serve is that understanding larger time, well, especially if you're in a larger time frame and a larger number wave, which I'll explain in a second. It helps you to visualize and represent the same information that's on a linear chart in a way that helps you to see long and short cycles and where they started, the long and short trends and where they started. So because data can be represented in so many different ways, this tool gives you access to be able to represent it in ways that you can measure different important pieces of insights according to where a trend may have started or ended. So there's this concept of not just looking at the daily, the hourly, the 15-minute, which we would call multi-time frame confluence. We would look at the daily, everybody does this nowadays, 4 hour, daily, whatever. But with the system, what you could do is also look at multi-wave analysis, which helps you, what is a wave? So essentially, a wave is a unit of measurement. When you're using the system, a wave is a unit of measurement for either zooming in to a trend or out of a trend. For example, within a particular day, there might be a particular segment where we were going long, it was directional, and then it turned around and went short. Or we went back and forth, or it just went short, or it chopped around the whole day. Well, what the wave helps you to do is to zoom in to that particular trend. Now you could just say, well, why don't I just decrease the time frame? Well, sometimes you don't want to decrease the time frame, but you want to still represent that same trend in different ways to find key areas where there was support or resistance given to the trend, or where the trend changed altogether. That's where the wave comes in. It helps you to do that same zooming in and zooming out without changing your time frame. So it's very, very helpful. I know that might sound a little bit complex already, but essentially it just helps you represent the data in a different way where you can capture insights without having to change your time frame. So so what I do on a normal
When you
basis
say
is
wave, would you also categorize that sort of as a rotation? Is that similar to a rotation?
in a sense, it conceptually, in principle, yes, it works like a rotation, like a rotational unit of measurement. That's a great because I mean the concept of rotations exists in order flow and auction market theory, I think, as well, but where the market moves in rotation. So yes, the concept of the rotation can be applied to understand the wave.
Okay.
For sure. So what I normally do is, let me remove some of the stuff that I like to use on my chart, but it's going to create confusion maybe for others. So you see all this oscillation up and down, up and down, up and down.
Mm-hmm. And this just so they know what they're looking at a high level, is this where
Yeah.
you'd be executing? Is this breaking down the details of what all the data is based on? What is this for?
Yeah, so right now each candle is a daily candle.
Okay.
And you see this oscillation around this middle black line, which is called a pivot. Basically, right now, what I'm trying to do is just analyze, see what's happening. And over the last 200 days, we have a long cycle when we're above the pivot, and we have a short cycle when we're below the pivot, which is this middle black line. So what I try to do every single day is that I look, are we above or below the middle black line? Right now, we have been in a short cycle according to this wave and time frame. We have been in a short cycle for the last 4 days. The 15th, 18th, 19th, and today the 20th.
And again, this is skewed price action, or is that based on all those? This is purely the daily candles.
Yeah, this is purely the daily candles. They have just been visually represented differently to help us understand where a short cycle started or where a long cycle started and where that transition happened. So technically, according to this wave analysis, we started a short cycle on the 15th. Now, if you just look backwards, you can see that sometimes we were in a short cycle for just like one candle. And this is why sometimes this could be very confusing. And the concept of multi-wave analysis is helpful. Kind of like when you look at multiple time frames, you can look at multiple waves in order to measure better what's really happening. So for example, I increased the wave number, right? When I increase the wave number, I'm not getting as much oscillation up and down, which helps me to visualize better what's going on without the confusion of the up and down. Where did the trend actually start? Where did it finish?
Right. And to show, I guess, when people are seeing this and they're thinking daily candles, they're usually, and you alluded to this earlier on, but usually price is linear. And by price being linear, I'm just saying it's going to dollar on the y-axis, just everybody. What he's done is it skewed it. So if you look over there on the y-axis, it's not, sometimes you might be messing with your chart and you hit logarithmic and you might see something that's not linear on the y-axis. For him, he's actually generating a whole different form of
representing the data.
Yeah, representing the data on the y-axis. That's not just dollar every tick or dollar every point on the y-axis.
Exactly.
it's squeezing it, shifting it. I'm not sure exactly what that would look like.
Yeah,
I'm assuming
yeah,
that wave represents the same curve that's in the
so yeah,
y-axis right now.
yeah. So no, it doesn't, but the wave helps me to represent where the trend started or finished in different ways so that I can actually detect more closely, was it really the 15th where we started a short cycle? Well, when you look according to the wave 7 versus the wave 1, the wave 7 shows actually that today we started a short cycle. So you might ask, this is really confusing. Did it actually start today or did it start the 15th?
Okay.
Well, when you are zooming in, again, multi-time frame confluence, but now multi-wave confluence, what this is helping me to understand is that since the higher the wave number, the larger the picture, then on a larger picture perspective, we are starting a short cycle today. But on a smaller picture perspective, we've started the short cycle 4 or 5 days ago. And you might say, well, all the candles are daily. How is the picture different? Because the market is not linear. I really encourage everyone to read a book. It's a little bit more technical, called Market Misbehavior by Mandelbrot. And he basically submits this hypothesis to the reader that the markets are not linear, they are fractal. And you might say, what does fractal mean? Well, essentially, consider looking at like a snowflake. And when you zoom into a snowflake, there's actually very intricate designs that are representative of what you see when you zoom out. And in fact, this is how hedge funds approach the markets. They approach it in a quantitative manner where these complexities of mathematical symmetry is sought after in order to find insights about how the markets move. I mean, you think about what happened today, right? We had a massive downside candle. The fractal actually has capabilities to let you know where, I mean, before it happens, where there's going to be increased volatility, forward looking, and where are the areas where we can expect the outlier moves to become exhausted. Like, let me show you actually.
I guess a general way of kind of saying it would be, if you took all this away and you're just trying to think in fractals, and correct me if I'm wrong in how you're trying to explain it for the system.
Yeah.
But if
Yeah.
you saw a let's just say you see a head and shoulders developing on a super low time frame. And then on the next higher time frame, you start seeing that head and shoulders develop. And then on the next higher time frame, you're seeing a head and shoulders develop. That first lowest level fractal at the lowest time frame, when that starts developing, that can be an early indication that this longer pattern that you're seeing on the lower time frame is actually playing out, and it's going to continue to play out on higher and higher time frames. So that early indication of it is by using the lower time frame. That gets you that hopefully leading indicator.
Exactly. And I'm glad you said leading indicator, because what's running underneath the hood of all this, if you want some more technical reading, is, I mean, there's a series of different types of machine learning models that are being used, but one of the primary ones is called a support vector machine. And inside of that support vector machine, so what they do is that there's this algorithm that helps you to classify different things.
K-means.
So K-means is one of them. Binary trees, forest. There's so many of them. And neural networks, Bayesian. There's so many. So what this one is, one of the ones that's primarily using is called support vector machine. And so that helps you to classify different things, but it approaches a classification different than others. All of them approach the classification differently, but essentially it's helping you to classify whether the trend is going to continue to stay short or go long, or vice versa. So when you see this chart, I'm going to try to address two things, but we were just talking about today's price action, how there was like a massive drop, right? I mean, it's really not that massive, but it was large. So actually yesterday, and I've actually shown this to Brian before on another stream, but yesterday you could have seen that the outlier move would have peaked at 63.62. Now, this is not hindsight. This was like already there.
So there's a lot going on the screen. So let's break it down. So the view you're currently looking at is a 15-minute interval.
Yeah, 15-minute time frame. And I'm looking at the wave 10. Now there's like
remember this is skewed on price. So you guys are normally seeing these are still candlesticks, right? To show it.
Yeah, there's
the
still candlesticks.
Distance that the y-axis is moving. So like the length you're seeing on these candlesticks won't be the same one you'd see on your normal candlesticks, because that's part of what he's doing for analysis. He's skewing it to put more emphasis on how his wave model works.
Yes, exactly. So yesterday, actually, you could have seen how multiple things. We were going to enter into what's called, many times we know it to be called a squeeze. But the way that this standard deviation tool works inside the fractal is that it's not backwards looking. It's actually forwards looking. So they coupled standard deviation tool with machine learning in order to get anticipation about how volatility may be. So since yesterday we were actually hugging what's called the squeeze zone, which was already giving us insight yesterday that there was going to be an aggressive move today. Now you might ask the question, well, where would that aggressive move start? You would have to continue to do analysis with different time frames and waves. Like, in fact, actually somebody in the community got in on a short on ES at 64.35, I think that's what it was. Yeah, at 64.35 and held all the way to 63.63. Which is awesome. They did fantastic. But what you could have seen is that there was already a sign from the system that there was going to be an aggressive move, even throughout this movement yesterday. But there's this feature called probability bands, which when you turn it on, you can see with like visually what the probabilities are for there to be continuation or reversal. So in fact, this morning when we got down to 63, 62, 65, you see this 1% band. 1%. What it's telling us is that there is 1% chance of going beyond 63, 62, 55, 65.
Okay. And then again, that's built on multi-time frames using some sort of categorization machine learning to find patterns that might be overlapping from time frame to time frame. Is that correct?
For this one, it would just be one time frame.
Okay, so this is one time frame. So this is
one time frame, but and then wave 10. So there's actually about three.
So you're measuring the waves and you're using a sample set of 10 waves. Would that be correct?
No, this is actually according to the last 10 days worth of data. So it's looking at the last 10 days worth of 15-minute candles.
Okay. But the waves come in as, I guess I'm still having trouble understanding.
Yeah. The wave.
Yeah, the wave.
Yeah, so the wave is essentially just a unit of measurement for the size of a trend. So for example, if I did wave 10, 15-minute time frame. 15-minute time frame. It's not a matter of like 10 candlesticks or like 10 days. That 10 is not it's not like something that could be, it's not something that's linearly explained, because there's a mathematical function for the wave that is honestly impractical for anyone to understand or try to understand in order for something like this to be interpreted properly. It's not necessary. So really the wave is just helping you to zoom out to what's happening above or below the pivot. So for example, let me show you.
Well, I guess
the wave,
if I did buy into the system, right, I found some value in it. Where or why would I adjust a wave?
Yes. So you would adjust the wave in order to know whether or not there's, sorry, my monitor's folly. You would adjust the wave in order to help you to see different angles of the same information. So let me show you real quick. I'm going to change this wave 10 to wave, let's say wave 50. Let me zoom out. If I was on wave 50, there's less oscillation, meaning movement above and below the middle black line, the pivot. But there's actually just like a handful of wave and time frame combinations that you can use on a normal daily basis to get a very strong analysis and therefore develop your execution. Yeah.
Normalizes the volatility based on your model.
Yes, that's a great way of explaining it.
Okay.
So the wave normalizes volatility so that you can understand the data in different ways and see different things. Like if there's a lineup of a particular level with another wave, you can take even stronger conviction based off of the particular level and say, okay, look, there was confluence with this wave in this time frame with that other wave in another time frame. So that's actually what I do. There's only like about 5 different ones that I did, 5 different combinations that I regularly use. So for example, one of them for the daily time frame is wave 1 and wave 7. For the hourly time frame, it's just wave 7. For the 15-minute time frame, it's actually just wave 10. And that's about it.
And if I was going to dumb it down even more, it's loosely sort of like finding the correct moving averages for your time frames that seem to work best for you. Would you say it's similar to that?
Conceptually,
yeah, yes. Very high level. It's not moving averages. I get that.
Yeah, but conceptually,
way more.
Yeah, in principle, how you would approach tweaking the moving averages, this is how you could tweak the waves. So there's some people who like wave 10 and wave 20 for the hourly better. Because of perhaps the way that they approach their execution and perhaps how long their holding time is. Like if your holding time is longer, you generally want to go with higher number waves. But if you're trying to find some middle ground, it's typically around 7 to 10 and sometimes 1. But if you're trying to hold longer, like doing swings, monthly swings, or even leaps, you could even with like options, because all this has options data in it too. You could do wave 20, wave 50, wave 100.
Okay.
But I appreciate you helping me break this down for everyone because
that's what I'm trying to do. That's
no, thank you.
It's very technical, so I'm trying to sure.
It's very, very technical.
Extremely technical. Let's get into some questions. And then any questions people have that are good questions, let's do something different and do like a $20 credit for the people that ask questions that are good, not bad questions. Good.
There are a lot of trading tools and elements to operate in markets, but will you agree that risk management is it all boils down to, as a fool with a tool is still a fool? What is your opinion? It's one of those things where it's just sort of the baseline of anything is you have to have risk management or the game isn't playable. So absolutely. It's one of those things where you still need edge, you still need you still need something that works, that actually gives you a profitability in the market that you can lean into. But psychology and risk management, those are sort of baselines you have to have to be able to execute on that edge. So a trader without risk management is a trader that's probably not going to be profitable long term if they continue to trade.
It's usually not the strategy based on the data that we collect. It's the end user, it's the trader that creates their own issues. So they can take a very profitable strategy and trade it in a way that it's not profitable, right? So you really need to focus on both risk and you need to focus on a process, because if your process is different every single day, then are you really trading the same way, or are you trading the setup the same way? And it's a no, right? So how can you expect your system to be consistent if you're not consistent? So you got to really break it down like that, is get as consistent as you can with following your plan and your system. And then you're going to see way more consistent results in the back end because you're not injecting all the inconsistencies, right? I know it sounds like a weird thing, but focus on doing the same thing every single time,
Yeah.
and then you're going to see way better results. It's just, that's the way it works.
Please ask him how we can have our hands on the system and how we can learn about it more.
Yeah, absolutely. So, I mean, a subscription directly to the system is $259 a month. That doesn't go to me. That goes to help. Literally, the servers cost hundreds of thousands of dollars to run for this system to work. But at the same time, I have the ability to give free trials to the system, and people can use it for 30 days. Different people have come in, and we let them try out the system for 30 days. Now, because the system is so complex, I encourage people to read the free articles. Again, free articles that I put out for people to understand what the different tools in the system are. I have videos that are coming out continuously, so people can know what they're getting into beforehand, see it play out, so that people aren't like, there's no way for me to grift you here. It's just, there's free information for you to look at. There's other videos that the architecture team has put out in order to understand the system as well. I'm in full partnership with them for helping people get educated with the system. So what you can do is join the Tradewell X Discord, which link has been shared in here before, but I can share it here. Let me see. Let me see. I have open. There you go. I just shared it in the chat.
Nice. Really helped me to do the base hits and leave. Helped a lot in staying in the zone. Futures Desk, thank you for the giveaway opportunity. Awesome. Yeah, we're really excited to see just how much our system helps people, especially the daily base hits, giving everyone a stopping place. I think a lot of people go on tilt and they're like, I just need a daily loss limit. I need a daily loss limit, but they don't really have a good sense of where should I stop on the upper side. And again, long term, you don't stop on the upper side. You don't stop because of a dollar amount. But I think it's a really good sort of rehab system to get people to just take some trades, minimize the number of trades they're taking, and stop for the day and just move on to the next. Eventually you can scale that. Eventually you can have these monster days. That's usually where most of the money is made in general. But the daily base hit, I'm happy it's resonating with so many people, and so many more people are holding balances with us and still increasing balances over time. It's pretty exciting to see people that come in and they're like, normally I'm in an eval for 3 days and I blow it. This is the first time I've held an account for over a month. I'd say that's progress. So we can get you to do that in our assessments. We get you to do that into a live brokerage account and just keep going. We scale you. We work with you. Yeah, it's awesome. We're really happy with the results we're seeing.
That's probably my favorite feature of the entire system. The entire system you guys have in place for your evals, the base hit. It's really awesome.
Do we still have launchpad deals? Not right now. So we are, as you can imagine, data driven. So we ran the launchpads for a while, and we're going to look at the data over the next few weeks and see, is it improving traders? What kind of results are we getting from it? And then if it works out, we'll bring it back. So right now we're in that research phase.
Yeah.
You want to develop a tool like this one you use? Are you talking? Yeah, that's a. Go ahead.
So
I don't think we have time to talk about that. That's.
Can you go in from the
pretty
beginning
complex.
how to build this whole system from scratch?
I mean, from scratch, you would have to make sure you have the right data feeds, and then do a lot of mathematical theory homework. Because when it comes down to it, it's just knowing how and what math is important, so that you put that machine learning model to learn that math, use that math correctly, and then represent to you the information the way that you want it. It's a very heavy lifting work. He didn't do it by himself. He had entire fleets of engineers build this system.
And he's still active in it, is what you were saying.
Yeah, I was just talking to him this morning. They still have features that they're putting out into the system. I mean, you actually can have access to the data warehouse where all the data is being crunched, and you can run your own SQL queries as well. That's for power users, essentially.
Thanks, Brian. I agree, doing the same thing. That has your edge present every time, and managing risk properly will do wonders for anyone. Yep. Absolutely. That's one funny thing is over leveraging. I know we talk about it all the time, and we always try to push people to use micros. I mean, the size of the drawdown in these accounts. I get it. There's a fun way to get really aggressive, over leverage, passing the minimum amount of days, but you're not really exercising a strategy. You don't really know if the statistics are playing out on that strategy. Five days is not enough information to know that. So you'll have wins, you have losses. There's sort of a cadence that people are used to in this space right now with these other sim funded companies. But if you give yourself the room, you size down appropriately, and you're able to take enough trades to actually have a statistical meaning, you'll actually learn things about what you're doing and how you can improve it. And you can start predicting a little bit better about what to expect from your strategy, what days I should, what times am I doing this poorly? Again, if you're just aggressively trading, changing strategies, and you're just trying to pass an eval really fast, look, you might get there and maybe your thought is I'll just get a first payout and I'm done, and I'll just keep trying to run across the high wire until I get that first payout. You can try that, but I bet that's not feeling so good right now. If you want something sustainable, it's risk management, sizing appropriately, and having enough trading data to make actual data-driven decisions. Because Roblex goes very far in on the technical side of his strategies. You don't necessarily have to, but you do need to track what you are doing, and or else you're just out there swinging in the dark. So.
Yeah, and I want to make this very clear, like as complex as this sounds and as in-depth as it sounds and technical, there's a difference between being a good analyst and being a good trader. That's why there's some hedge funds that have just entire teams of analysts and then just entire teams of just traders. And merging both worlds is actually a very big feat that you have to do by yourself. Many times there's
then add a risk manager. You got to be your own risk manager. You got to be your own coach. Like most people are in that situation where they want to compete in the Olympics, but they don't want any, they don't want to work with other people, or they're not appreciating how difficult each of those sectors are. Absolutely. It was a great point.
So as like in depth as you can get into, I mean, it's limitless. The ways you can get into the system to have a good analysis, but at the end of the day, you still have to click the button.
Yeah.
And you have to click it properly. I've blown accounts before. I think everyone has, but it's just like,
I hope so.
Risk management, right? Risk
I don't mean
management
for that, but I just mean if you haven't experienced.
No, that was mean, bro.
I just mean if you haven't experienced the losses that are inevitable with how statistics work, and you haven't gone through that to understand there's a, how can I keep the North Star inside my vision? Then you're not going to know what to do when things do get bad. So
I think most people have lost accounts, blown stuff up, and it's funny because a lot of people think they've worked on their habits, their bad habits, all their bad traits, and until you get into like a series of losing trades, you think everything's gold and everything's amazing, and you're doing killer, and then the market comes and smacks you in the face, and then you just implode and blow up, right? Things are good when they're good, but when they're bad, that's really what tests who you are as a trader, and you got to really perform while your strategy is doing bad. And most people don't have that muscle memory or framework to deal with bad times, and that's why risk management's so important. Is when you have bad days, you got to have that stop gap that stops you from continuing, right? It's got to come in and basically be safety rails. And I think most people don't have that right now because they're so, used to trading these assessments that it's more like gambling, right? They have no daily risk. They either can get lucky for a couple days and get through, but is that really long-term success? It's not. And it's actually teaching really, really bad habits. And that's why you really got to size down and kind of like let your system actually play out versus getting a lucky, 1 week streak. So, it's different. That's what we're trying to do here. We're trying to get people to focus on long-term success, not gambling, not being, short-term results kind of stuff. And that's why, we offer the longer, day plans and stuff, because look, that's what it's going to take. If you got on a lucky streak, that's cool. But what happens after that? How are you going to react after that? And that's what's so important.
True.
It's a wild world of trading.
Yeah, no, it is. But
one point, actually.
Sorry, go ahead.
You guys want to? We're about 46 minutes in. You guys want to do the giveaway? Get some people excited about being here. Oh, there's our boy Raj.
We're gonna engineers can go on for about 4 hours, and we're gonna do a dissertation at the end. So
sounds good. I made my.
We're gonna give people like 3 minutes to enter for people that just joined, and then
a 2-hour coding session after that.
At 12:50, we're going to start the giveaway.
Okay, so 12:50.
A few minutes left, guys.
All right, I was just going to say one quick thing I wanted to point out was with separating the analyst from the executor, one really good way to do that yourself as one person is separate your charts. So have your morning analysis, those charts, do your analysis, come up with your plan, hand it off to yourself, right? As the executor, hide the charts that you do for analysis and just focus and be like, okay, now I'm an executor. I'm not going to come up with ideas. I'm not going to say this feels weird or any of this weird, silly stuff that traders like to come up with to chase their FOMO or they're scared. You stick to the plan that you came up with earlier as the analyst. So you can segment yourself like that.
That's brilliant. I've never heard of that before. I've just copy your slimmed down chart. Like obviously I have a lot of stuff in my charts because, and one of the reasons for that is because there are a ton of people that are looking at my charts and are approaching it from different angles. Mm-hmm. But if it was just up to me, I would probably have maybe 5 things on my chart at most. But I decided to I made a decision to open up a community and do analysis for others.
You're a man of the people.
I'm trying to be, but I got to make sure I still grow at the same time for my own pressing the button. And this is what I wanted to say about the Futures Desk. The Futures Desk eval and live process helped me to really reconsider what my approach is, because obviously you do approach a smaller size account with the same principles as a larger one. But it's different sizing, it's different drawdown, different sometimes an even different approach to your stop losses and whatnot. But the thing is, in principle, it's the same. So it's actually good. It's been a really good exercise for me. Awesome. And I really appreciate how you guys approach this whole world, because it's not just the trading world, it's the prop firm world. And I just really appreciate the hard work you guys do for everyone, because I really don't think is appreciated as much as it ought to be, because your approach really helps people they're approaching real money. It's not simulated funds.
Right.
Once you pass and go through a brokerage.
It really changes the dynamic between us as a company and the trader, because we need the people to be successful in the brokerage, right? Because that's where we're trying to generate revenue. And if we have guys go in there and just go in and risk everything and it blow up, it's okay, cool. Well, there goes that 6K, and it didn't get us anywhere as a company, right?
Yeah.
So it really is different than these other companies where they're paying out of pocket and it's a sim environment that you're trading in, and they don't care if you're successful. They want you actually to fail, so they'll give you too much leverage, no daily stop, stuff like that. But when you come to us and you trade with us as a trader, we have your back. And that comes from our experience of helping hundreds of traders transition into live markets. It's this is what works and this is what doesn't work. I met with a trader today that actually started very small, and I just sized him up today. Got a nice payout, sized him up, added some extra contracts for him. But he came in and he's had a very good week, and he's like, oh man, let's double my drawdown on the day. Let's do double the contract size. Like, whoa, hold on, buddy. Like, let's not double your risk. Let's start you slow. Let's ease you in, because I know what happens when you double risk like that. Like,
tilt
it's not
is
going to be yeah.
Tilt
You
is
have
when you're
one-
not at center, right? It doesn't just mean you're tilted to the negative side.
Yeah.
When you pass an assessment, people tilt immediately. They're immediately thinking, I've got this figured out. I passed an assessment. And that's great. Like, congratulations on the milestone. But take a step back and go, sometimes you might want to just be like, look, I passed. Let me just take 2 days off. Like, that's okay. Like, whatever you need to do to be centered when you continue, that's what you do. I like to say, I have this little thing I like to say where with us and all the other companies in this space, we have to sort of sit on, the Vegas Strip to get everyone's attention. But when you come in the doors, it's actually a secret rehab center. So it's like, surprise, this isn't going to be the YOLO prop firm. This is going to be hopefully somewhere you can go to actually come out of it and feel like you're a better trader, whether that's your own personal account or hopefully you stick with us and we make money together. But that's what we're trying to do here.
Yeah, and I really
so
recommend
good.
people lean into using the dashboard, because the data that we have for, I think, around 15,000 traders now, the traders that use the check-in, that are tracking their metrics, that are journaling, actually have a lower win rate, right? But they actually have more profits. They make more money with a lower win rate. So it's weird, but then you start to realize, well, the traders that might have a bigger win rate, even though they have a higher win rate, they lose a ton of money, right? So their P&L curve is lower. They actually lose money. So there are multiples way worse. And the reason behind that is because probably they're not following rules. So they'll maybe work their way into a position and figure out sometimes they'll get they'll get out of it, right? Everybody's had that time where they're like, oh my God, I just got so lucky and I got out of this, even though you broke all the rules in the book, right? And everybody's done it, right? And then you reinforce those bad behaviors. But through our system, by keeping tabs of yourself and setting rules, I know rules aren't fun, guys. I know it. I get it. But guess what? They help you. And we have the metrics to show you, like, no, dude, they help you. If you do the daily check-in, if you do the work, you get results. And not only do you get results, but like, you can have a lower win rate, but still make more money. Like, nothing's changing. So
we'll be
like,
publishing
put in the
some
work,
data
guys.
there. We'll be publishing data there. But to what he was alluding to and saying was, we literally have the data now that's building, that's showing by putting in the morning prep work, by our traders that do the morning prep work, that are aware of the morning prep, have a multiple percentage higher success rate. So this stuff is working, and we're proving that it's working, and we're constantly improving the system. There's some really cool features that are coming down to the dashboard. And I know a lot of companies say, oh, our dashboard's coming out and it's updated, and everyone's like, oh, cool, there's one new little something on it. And that's really for the prop firm owners over there are just excited, and props to them. They're improving their system. We have some features coming out that you're not going to see elsewhere that probably didn't expect to come, that actually will help you. It'll simplify your day and improve your day. So that's the kind of stuff we go for.
There's already features in the system that is worlds ahead of other prop firms. That, like, because I mean, again, it's the truth. Their business model succeeds based off of failure.
Mm-hmm.
And when you have a business model that's based off of the trader's success, you have to approach it differently. And that's honestly one of the reasons why I try to get people, when they're wanting to go to live as much as possible, which is a realistic situation, to go to TFT first. It's just the truth. I've done it before. I have friends
it's
right
a harder
now
problem
that are
for
on
us.
TFT.
If we wanted to make more money as a prop firm, we could copy all the other models and give out these tools at the same time and make more money, letting people reset all day, 50 times a day, and building on the backs of that. But we took the road less traveled, actually not traveled, and we are trying to do our best to actually give you guys some results, because our core model is improve traders for live and then scale them in live and find those anomaly traders that can really push our bottom line. Again, it's more difficult to do. That's a bigger path. Traders are going to fail if you let them, and they'll fail either way. But anyway,
Who wants to butcher some names today? Who is it?
Always
Who's doing
Roblesh.
it?
Oh, flash sale
look
too.
at this. Flash sale. 70% up off on statics, 50% on EOD. Stacks are awesome because there's no little thing that's trailing behind you. Statics are just like you would have in a live account. It's a great sell. It's, I think, the biggest percentage discount that we've ever done, but again, shameless plug. Please use Roblesh's code. He is an affiliate. We appreciate his time. We want to reward him for that. Other than that, Josh, are you going to butcher the names today, or are we going to make Roblesh
All right, I
do
can
it?
do it. I'll do it. I'll
You're
say
gonna-
the first
what
name.
about
He says the
1-1?
last name.
Wow, that is
I,
a
I
very
want,
big
I want to do a
win.
giveaway too for the community.
Okay.
I want to do two.
Cool.
All right.
Wanna
we
do
can-
two.
we can
Roblesh
do
is
an
giving
extra
away a
spin then.
Lamborghini. I see in the notes.
toy car, Lamborghini.
Toy
car. Come on.
Lamborghini. I'm sorry.
Don't set him
Should've
up like
qualified
that,
that.
man. That's messed up.
Oh my god, that's a lot of names.
Yeah, it's a lot of names. Everybody loves the giveaways.
Ruth Naoni.
I like it.
Congrats.
Ruth.
Congratulations.
Raj will be emailing you credit shortly. Michael Lopez, I'll handle that one. Yeah.
Why was it a little slow when you were reading Michael? Were you anticipating
I thought it was
hard name?
Michal. I thought it was the French.
Got
So one other cool thing, guys. You know, this we have the static and the 50% off the EOD sale. Please take advantage of it. It ends tomorrow night. We run these promotions. We haven't run a promotion like that. So check it out. Also, cool thing, if you signed up for the giveaway and you've never got a credit or won anything with us before, you're all about to get a $20 credit. So there is a little something to get you started. And hopefully that's the account that you get that takes you live with us. Whatever you guys do, just take it slow. Reduce your size. Make your next account last. Don't make resetting an option. And yeah, just keep working on it. Keep working on your edge.
Survive to thrive.
Yeah.
Survive to thrive.
Reduce your size. Reduce
so-
your
Reduce
size.
your size and thrive or
Yeah.
to
So
survive.
pretty much every time we do the drawing, everybody's like, oh my God, I don't win anything. So we literally just made everybody a winner. So if you haven't won before and entered today's competition or drawing or spinny wheel, whatever you want to call it, you are going to get $20 credit. So congrats to everybody that's on the live stream today.
That's awesome.
You got $20. Use that for whatever you want to use it for. Slow and steady, that wins the race. I'm telling you, the traders that slow down, think about risk, think about runway, how long they have based on their daily loss limit. Those guys succeed the best, guys and girls.
Mhm.
So slow and steady, guys. Yep, first time ever. Yeah, super cool. Yeah, it was I think Raj's brainchild between the let's give everybody a discount, or not discount, but credit. So thank you, Raj. Well played.
We'll do
Oh,
two
right,
spins.
now.
The Roblesh spin.
Okay, Roblesh spin.
Two Roblesh spins. One of them.
2 Roblesh
Ooh.
giveaways.
Ooh, giveaways.
Tony Glover.
What the? How do you get these easy names, bro? Tony.
Tony.
Come on.
I think it's
Tony.
Lover.
Glover.
You butchered
All
it.
right, there's a question that I guess. So check it out. Anybody that has not got a credit with us before, we have your email now. We'll send you an email after we apply the credit for everyone, and it will be automatic. You don't need to do anything. And then when you go to the checkout, so let's say you build a plan, you go to the checkout, you'll see the credit during the checkout process, and it will be applied automatically for you.
Yep. So whatever the next thing you do is, whether if you need it for a reset, if you're already with us, or a new account, it'll just show up in checkout, and that stacks on top of the promo. So
Yeah, and winners of the Roblesh giveaway, please join the Discord. Send me a DM, and I'll give each of the winners 7 days access to all my pre-market analysis and charts.
cool.
We'll
We'll give you the email, Roblesh.
Okay.
Give you their
Oh,
email.
that
we can
helps.
use the email. Yeah. Should
That
help you.
helps a lot.
Then they don't have to do any extra legwork. Go to Discord and all that other stuff.
Yeah.
All right. What questions we're at an hour, so we don't like to really extend past an hour. But if we have any questions for Roblesh, also who won the engineer battle? I don't know. Seemed like it wasn't really. Nobody really stood out to me. Who won, Josh? Did you win?
Josh won. Josh won. Josh won because
Roblesh brought all the tech.
Yeah, he brought all the big tech.
But Josh explained it for everyone else to understand. So,
but did they understand?
I don't know. We don't know.
We don't.
Hopefully
know.
they did. Maybe they'll show up in your room and they'll be confused.
We'll never know.
Yeah, but
we'll never know.
Hopefully you guys got something out of this. We're all available on Discord, in chat. This is just hop into Discord if you guys want to continue some conversations with us. But this has been great. Thank you, Roblesh, so much.
Oh, thank you for the time.
Do you have any other last questions? 100% what Brian said a year ago at mini months. The mooring credit came very fast. Okay. Grateful to Futures S, great initiative. These are all, I love this. Not questions, but I'll take it. Make it rain compliments. One question is there. Whenever you trade my live account, I trade better, but somehow I have not been able to be consistent in assessments and advice. I'd have to look at your trade data, and we're happy to look it over for you if you want. Are you taking the same strategy? Are you trading at different times? Obviously, stress comes to it. There could be some sense of you're treating your live money better than you're treating the assessments. You have a pattern with that. It's hard to really narrow it down for you, but those are some general ideas. But I would say if you're trading the exact same strategy at the same times, that would be obviously there's some gap there. So we can help you figure that out. Just reach out to one of us. Fine with replays and practice by tank evals and funded. Yeah, that would be the normal case. Less on the line. It's easier to make more rational decisions right when that stress kicks in. And if you're not familiar with recognizing the stress is coming and adjusting your decision making so you continue to make rational decisions and not decisions based on that stress is a difficult skill, but it's an attainable one. It's just an exercise you got to work out, just like any other muscle in your body. You'll never get rid of the emotions, so don't think the emotions are just going to go away one day. If you're risking enough where it matters at all to you, you will have emotions from this. It's more about learning to how to react to those emotions, how to think clearly when those emotions are happening. That's the skill to have, not how do I suppress myself so I don't feel fear. You can't. Clearly a psychological problem. Could be, but it's an easy out to say it's a psychological problem. Make sure you're really looking at the data and make sure you actually have a clear edge. How do you deal with hesitation moving to live from sim? So yeah, there's usually two large camps of traders. There's the traders that are overzealous and they trade a lot and they want to get in on everything and they got that FOMO. And then there's what Ben, I assume you're talking about, is hesitation. So you're seeing the trade and you've got your eyes in the headlights and you're not moving and you're not taking the trade you're supposed to. You're going to have to come to grips on that. You're going to have to say, is this my strategy? This is my job. I take the setup. And you need to punish yourself in a way where if you're not doing your job, you're not taking the setup and it's checking all the boxes, that needs to get addressed. And it's not always solved with necessarily meditation or anything like that. It's literally you need to learn to click the button. You need to take a step back when you're taking a trade and go, I'm really nervous. I'm hesitant. I don't know if I want to take this. I'm coming up with new ideas of why I shouldn't take it that I've never thought of before. I've got someone in my other ear on live stream that's yelling about how the market's going to sell off. Like, that's reduce the information load, focus on your strategy, execute. That's all we can do. Execute. The starter tier is genius, by the way. Kudos. 150 base hit, 400. It's great simulation light or effective use using a mini. Yeah. I would still suggest using a micro for like NQ or that's a rough hit for minis in the indexes. But if you're using, I'm going to assume you're in the bonds markets or something that's thicker if you're using a mini with that drawdown or very short scalping. But yeah, appreciate it. Trying to find things that fit people's price range for our risk and their risk. And a lot of people like that account. Just take it slow. It's a good way to rehab yourself. You're coming out of these other programs resetting all the time. Great option. Just be like, look, I'm going to have a higher net profit this month because I'm not going to lose money resetting and buying assessments all over the place. Sometimes just by resetting less, you'll have a better overall cumulative P&L curve. Yep. Resets, the credits have gone out, Raj is saying. So the $20 credit you should get an email for. Everyone that even entered the giveaway that hasn't had a credit or a win before will be getting that.
Yeah, and just to add, if some weird thing happened on the email or you entered it twice or something like that, look, make sure you don't take advantage of the credit thing. We are going to check to see if you've had a credit before, and then that account, whoever it's under, if you do end up getting funding, the account's got to match the person, we're going to set up in the brokerage. So we had a situation this morning where somebody was trying to use other people's credit cards, and it's like, I don't understand why you guys come to us, because in reality, we have so many different methods of verification through the brokerage process and KYC and stuff like that. And if the cards don't match, you're never going to get a payout from us. So it's like, it just seems like a lot of work for nothing. But ultimately, guys, don't try to game the system. We try to do this to help people. So help us by not trying to game the system. If you entered a wrong email or didn't put it in right or whatever, and you don't get the credit, reach out to support and we can make sure that you get the credit. We can add it there if you need to, if we need to. But yeah, cool. I'm glad everybody hopefully got their credit already.
All right, last one. I'm using 1 micro, but the ratio of the P&L feels like using a mini. I guess that's why people use ticks, but I can't because there's always some data feed that doesn't use ticks. Okay. Yeah, 1 micro, good. Glad to hear it on that account. Just take it slow. Just build that system. Give yourself the room for your system to play out, and you can start adjusting those statistics. You get to live with us, we're going to grow you. Like, build a base hit system. We can grow that. If you pass as fast as you possibly can with giant swings, we don't know what to do with you right when you get to live. All we can do is start assuring that you're managing risk, and then hopefully learn more about you as you trade with us. But you got to give it enough time to play out. Cool. Flash sale, 70% off. Static accounts. See you guys in the Discord. Thanks again, everybody.
All right, guys. Catch you next time.